Who pays taxes on inheritance?
Who pays taxes on inheritance? Okay, so
There's a lot of different taxes that could
yeah,
be
I was just going to
considered.
say that question isn't about inheritance tax. It could be,
Yeah, so
but they left out that word.
there's estate tax.
Right,
There could be any taxes on the actual inheritance that you acquire,
right.
like property tax. There's also going to be income tax on any income that's generated from the inheritance. So there's a lot of different pieces.
Yeah, exactly. So, the estate pays those taxes. Let's start with the estate tax because that's the one that's kind of easy. Estate tax means I would call it an inheritance tax.
Yeah,
So, right now, the exclusion that you can pass to your beneficiaries without any estate tax is 13.6 million. If you have a trust and set it up as an AB, you can actually double that,
yeah,
right? But if you're under 13.6 million, for example, as an inheritance, there won't be any estate tax or
yeah.
inheritance tax. And that keeps going up. I looked it up today. It's going to go up to 13.99 or basically 14 million next year in 2025.
Yeah, it depends on your state too. States could also have a little hand in the, but most
That's
don't.
true. Yeah, there are some state issues that are different in some cases, and so then obviously you can have property taxes and things that you have to deal with because the estate doesn't just close overnight. So
Hmm.
there's things going on. There's still bills coming in. The utility bills are coming in, and the last ones maybe you're shutting it off. There's stuff that happens. The same thing with income tax that's coming into the estate. Obviously, pensions and Social Security should stop right away.
Yeah,
However, if there is assets that are generating incomes, that's still
yeah.
there.
If you have a rental property, it's still going to keep
It's
getting those rents.
yeah, you hope so. I mean, that's what you want. Required minimum distribution, I believe that still has to be, if it hasn't been
If it
done,
hasn't been completed, you have to complete
you
for
have to
the
complete
state.
it. So those are all income taxes, basically. They're going to end up on a tax return. So there's usually a final tax return that's prepared for the estate. The estate money pays those taxes if there's taxes owed. And that's why you kind of got to keep the estate open for a while, get everything kind of settled. So all the expenses are taken out of the estate, and what's left is now, you know, not needing additional, ongoing, money from that. And then that's when the estate can close and all the assets can be distributed. Even in a trust scenario, sometimes it can take a little while
Yeah,
just because there's a lot of steps, that need to be handled. But in terms of who pays the tax, the estate pays the tax, and the beneficiaries. It kind of depends. That's not completely true. Let's say that somebody passes away, and we step up the cost basis on the stock
hmm,
to current value. Let's just say it's $10,
yeah,
and by the time we're ready to distribute it, it's worth $11. So theoretically, if the estate sold it, there is a tax that the estate would have to pay. I would bet anything that it's probably better to just pass that
yeah,
share directly to the beneficiary and let them either just keep it
yeah,
and
and decide whether
just
they want to distribute or not.
right, or if they want to distribute it. There are some weird tax rules. Again, we're not tax CPAs, but there are a few estates. I mean, sorry, a few different types of trusts that don't get the long-term capital gains tax treatment. So anyway, that's something to talk to your accountant about as far as that goes. But I mostly, in our case, we've dealt with a lot of these, is mostly share distributions
Yeah.
and not liquidation and then cash distribution as much.